Efficiencies of the Cyprus Tax Regime.
I am Panayiotis Nearchou, Head of the Tax and Compliance Department of Arosal Audit, and in this session I will present to you some of the benefits of the Cyprus direct tax regime that make Cyprus an attractive investment and business destination. The aim of this presentation is to give you an overview of the relevant key tax incentives, both corporate and personal. Okay, so starting with some key corporate tax benefits, the headline corporate tax rate is 12.5%, which is one of the lowest in Europe, whereas this rate can effectively be much lower, taking into account the numerous tax incentives offered by the Cyprus tax legislation. The intellectual property and the national interest deduction regimes can each bring the effective corporate tax rate down to 2.5%. The two regimes, which we'll be discussing in more detail in a minute, can even be combined to reduce the effective tax rate even lower. Moving on to some of the key corporate tax exemptions, these include a tax exemption on any gains realized on the disposal of qualifying securities, both debt and equity, such as shares and bonds, as well as a tax exemption on gains of a capital nature, excluding those realized on a disposal of immovable property situated in Cyprus. Another key exemption, particularly attractive for holding entities, is that of dividend income, which should be exempt from taxes subject to easily met conditions. The final exemption in our overview is that of profits of foreign permanent establishments, which should be fully tax exempt provided that certain conditions are met. Last but not least, Cyprus offers an extensive double tax treaty network with over 60 countries, access to EU directives, and zero withholding tax on dividends, interest, and most royalties paid abroad, provided that the recipient is not in an EU blacklisted jurisdiction. Okay. Through its visionary intellectual property regime, the so-called IP box, Cyprus encourages research and development activities. Central to the Cyprus IP regime is the notion of qualifying assets, which encompass a broad range of mind creations, such as patents, copyrighted computer software, and other IPs satisfying criteria such as novelty and usefulness. It is noteworthy that marketing-related IP, including trademarks and brands, should not qualify for the Cyprus IP regime. In calculating the profit subject to the relevant deduction, the so-called nexus fraction is used, which aims to align the benefits arising as a result of owning an IP with the expenditure and activities which took place in order to develop this IP. Without going into the details of the formula, one crucial aspect is the underlying research and development activities. In particular, the higher the amount of R&D undertaken by the taxpayer itself or via unrelated third-party outsourcing, then the higher the amount of the deduction, as opposed to higher levels of R&D outsourced to related parties and higher cost of acquisition, which should reduce the effectiveness of the Cyprus IP box. By utilizing the maximum of the 80% potential deduction, the effective tax rate on the relevant profits can drop down to 2.5%. And this is one of the reasons why the Cyprus IP regime bolsters Cyprus's position as a global hub for intellectual property management and development. Now, moving on to another key regime, the national interest deduction regime, which targets the promotion of equity financing of an entity's taxable operations. In a nutshell, NID is calculating by multiplying the equity being paid up share capital or share premium by the so-called reference rate, which is the yield of the 10-year government bond of the jurisdiction in which the relevant funds are directly invested, plus a 5% premium. Therefore, the NID, which is capped at 80% of profits resulting from the activities which are financed out of the qualifying equity, might reduce the effective tax rate down to 2.5%. Okay, now let's have a look at some very generous incentives for individuals. Starting from the Cyprus tax residency rules, a person relocating to Cyprus can achieve the Cyprus tax residency and enjoy all the benefits that come with it by spending here as low as 60 days in aggregate during a year. However, there are conditions attached with this rule which should be considered. Of course, a person spending in Cyprus more than 183 days in aggregate should obtain the Cyprus tax residency without any further conditions attached. Now, a Cyprus tax resident individual should be taxed on their taxable worldwide income. The relevant rates are progressive rates, which range from 0% with a €19,500 annual tax-free threshold up to 35%. On top of this, individuals should enjoy many generous tax exemptions, which we shall discuss in a minute, but for now let us emphasize the full exemption from capital gains, which is the same one discussed earlier for corporations, and it includes gains on the disposal of shares or bonds. The non-dom regime now is particularly beneficial for physical persons taking up the Cyprus tax residency who earn dividend, interest, or rental incomes, as these sources of income should not be taxed under special defense contribution. For completeness, it is noted that rental income only should be taxed under income tax. Finally, it is noted that such status and exemption shall apply for a period of 17 years, since persons remaining Cyprus tax residents for 17 years in a 20-year period should be considered Cyprus domiciled. Okay, moving on now to see some very important exemptions on remuneration earned from the rendering of salaried services. Starting with the 50% exemption, this should conditionally apply on first employment remuneration for a period of 17 years, provided that annual remuneration exceeds €55,000. Next in our list is the 20% exemption, an exemption capped at a maximum annual amount of €8,550, which should conditionally apply on first employment remuneration for a period of 7 years. It is noted that the two exemptions, the 50% and 20% one, cannot be claimed simultaneously. Lastly, the so-called 90 days rule stipulates that individuals who are employed outside of Cyprus for more than 90 days in aggregate in a tax year should be fully exempt from income tax on the said income. Now, as a summary of all the exemptions available to persons relocating to Cyprus and taking up the Cyprus tax residency, one can see also on their screen now how the Cyprus tax framework is extremely advantageous for such individuals, since all of numerous key incomes should be exempt from special defense contributions, whereas the majority should be exempt from income tax as well. Even those few of these incomes which are taxable under income tax have significant deductions attached to them to reduce the effective tax rate even further. More specifically, rental income subject to income tax should enjoy a 20% deduction of the gross rental income, full deduction on any loan interest income financing the relevant property, and wear and tear allowances. And finally, for employment income, of course, subject to income tax, this should enjoy one of the exemptions we discussed earlier. I would like to thank you very much for your time. A huge thank you to the organizers as well. Based on our presentation, I believe it's clear how attractive Cyprus can be for anyone to bring here their business, themselves, or even their people. Feel free to catch up on me later if you have any further queries, or contact me directly. Thank you very much.